Thank you, everybody, for joining. I am going to just quickly share a housekeeping slide. Thank you, Ross, Elizabeth, Tristan, Anne, for joining. I think we have a great webinar ahead of us, and thank you to Wetlands Watch. I just noted that this webinar will be recorded and posted to the chapter's YouTube. I will share that link in the chat box. We really do encourage questions towards the end, and just to help us keep tabs of everything, please do make sure to put all your questions in the Q&A box versus the chat box. But feel free to direct message me any logistical questions throughout the webinar via the chat box. The CM credit is listed here, 925-9038. And I will pass it over to Elizabeth to handle introductions.
Great. Thank you, Jillian, very much. And thank you to everyone for joining us today, and to our speakers, whom I'm going to introduce in the order in which they will be speaking. I just want to note that this series of climate change related trainings, we've had, this is our fourth one, and we're hoping to have a couple more. And at the very end, we are going to give you a little poll to see what topic you'd like to hear about the most, or topics. And that to note that the Virginia Environmental Endowment was the first to initiate interest in climate change training in the Commonwealth. So we want to recognize them for that. So today we have with us Ross Weaver, who is the Program Assistant Director for Wetlands Watch. At Virginia Tech, Ross received a BA in Political Science and a BS in Environmental Policy and Planning. And prior to joining Wetlands Watch, he graduated from the University of Virginia School of Architecture with a master's degree in Urban and Environmental Planning. Previously, he worked for the Sierra Club, the Institute for Environmental Negotiation at UVA, and the Thomas Jefferson Planning District Commission. And Ducey-Ortiz will come after Ross, and she is the Director of Planning, Zoning, and Environmental for Gloucester County. She's been with the county since 2000 in increasingly responsible roles. And prior to coming to Virginia, she worked for the Town of Huntington, New York, for 11 years as a planner and an environmental analyst. So she has been involved with this stuff for a long time. Tristian MacKinnon Barnes is the current floodplain administrator for the city of Norfolk, which she's been doing since November of 2021. She became the CRS coordinator and floodplain planner for the city in January of 2020. And she previously worked in planning in Isle of Wight County and in stormwater for York County. She holds a BS in geography with a concentration on urban studies and an MPA from Old Dominion University. So with that, I'm going to hand it over to Ross. Thanks, Ross.
Okay. Thank you, Elizabeth. Let's see. At the moment, my screen sharing is disabled. Jillian, if you can help me out with that, I can share my slide.
Should be good to go now. Apologies.
Yep, no problem at all. Let's see. Is that showing the full view, or is the presenter view there as well?
It is the presenter view is not there, but the tab at the top of the screen is visible, but that shouldn't be a problem.
Yeah, I don't think I have anything questionable. I think it should be fine. Cool. Well, thanks very much, folks. I appreciate you giving me the opportunity to speak about these very important updates. So I'll be giving an overview of Risk Rating 2.0, which is the new national flood insurance program updates towards the NFIP, and then speaking briefly about how that impacts the community rating system, which is something that a lot of our localities in Virginia have enrolled in to reduce premium costs for property owners. So it should be a pretty interesting conversation. And I really want to thank our folks from localities who are out here to kind of give us some context about how this is implemented on the ground. It certainly adds a lot of context. So just as a kind of a brief background, I like to use this graphic to explain the NFIP. I like to think of it as a sort of a three-legged stool. We have hazard identification, flood insurance, and floodplain management. And so for this conversation, we're mostly focused on flood insurance, but I think it's important to note how these three entities work together. So for hazard identification, that's really what you think about with FEMA with the flood insurance rate maps, the identifying hazards, what's going to flood during storms, the 100-year flood zone, 500-year flood zone, and all that good stuff. In terms of the regulatory leg of this whole stool, that really has not changed through risk rating 2.0. You still have to be enrolled within the NFIP. You still have to meet those minimum standards of regulations to get NFIP policies in your locality. That has not changed. So basically all local governments have to maintain their minimum standards for regulating within flood zones. But risk rating 2.0 has really been focused on addressing the flood insurance program. And we'll just get straight into it. So what is risk rating 2.0? Basically, this is the first time there's been a major modification of the flood insurance rates since the 1970s. So it's been about 50 years since we've really addressed the NFIP policyholders and the rates. Why is that being done now? A few reasons. One, as you can imagine, after 50 years, we have a lot more sophisticated data. There's a lot more science based on risk. But also flood risk is increasing nationally. We know this with climate change, with increased precipitation, with a lot of the events we're seeing in Virginia. It's obvious that our flood risk is continuing to expand. There have also been some equity issues because historically there have been policyholders who are overpaying for insurance, and there have been a lot of folks who are underpaying for their insurance. And really the overarching goal of risk rating 2.0 is to create solvency within the NFIP. At the moment, it's $20.5 billion in debt, $20.5 billion in debt. And, it's not particularly sustainable. So this is an attempt to make those rates more sound, to make sure that folks aren't paying more than they need to, and to really start actually paying the full rate of flood insurance. This is a kind of a quick visual to how this debt has grown. You can kind of see how specific superstorms and hurricanes have caused this massive increase in the debt of the NFIP. And that's really, there's been a lot of cancellation of that debt throughout time, but for the program to succeed in the future, we have to figure out a way for folks to pay for their full risk. And that's what this whole process has been about. So as I said, at the moment, NFIP is about $20.5 billion in debt. So what is the general background? What's the gist of risk rating 2.0? The big takeaway, FEMA has completely changed how flood insurance rates are determined. They're no longer based on flood insurance rate maps. So, those classic maps we know of with the 100-year floodplain, 500-year floodplain, shaded X, all of that. It's no longer based on that. There's no more grandfathering. So for localities that have structures before flood insurance rate maps, there's always been subsidized rates for folks. Those are going away. One big takeaway that will have a lot of implications, I think, for localities is that there are no more preferred risk policies. So these are policies that came from outside of the 100-year flood zone, folks who elected to have flood insurance. They have typically paid a pretty small rate to be insured. Those rates will be the ones that are increasing most rapidly. Those are the ones who will have to pay a larger chunk of change to actually have flood insurance. One big thing, especially as it kind of considers equity, is that the rates of an individual's flood insurance rates will be based in large part due to the value of their structure. So historically, if you are, say you have a small property in a 100-year flood zone beside a much larger, say 2,000 square feet larger, much more valuable property, those two property owners will be paying the same rate. That's going away. We're trying to factor in the cost of replacement structures to deal with that equity issue and make sure folks are actually paying for their actual risk. And all of that kind of ties into paying a full risk rate. I'll just mention now that when we talk about paying full risk rates, there is a congressional cap to how much flood insurance can increase each year. So at the moment, for your primary structure, your flood insurance legally can't be increased by more than 18% a year. If it's a secondary structure or an investment structure, investment property, that can increase by 25% a year up until it gets into its full risk rate. So essentially, the outgoing methodology for the National Flood Insurance Program, is primarily based on the flood insurance rate map, base flood elevation, foundation type. Those are kind of the biggest characteristics. But moving into risk rating 2.0, we've really changed that quite a bit. The biggest variables now are distance to flooding source, whether that be the coast or river, different types of river class, if the flooding is fluvial or pluvial, ground elevation, first floor height, but also a much bigger focus on construction or foundation type. So this is a much more individualized approach. It's based really on the structure itself as opposed to the larger area that it inhabits. As I mentioned, there's a limit to how much the NFIP, how much property owners' rates will increase over a given year. It's capped for your primary structure at 18%. So FEMA has estimated that by the first year of this program, 25% of properties will be paying their full risk rate. By year 5, about half the properties in the country will be paying that full risk rate. And then within a decade, in year 10, 90% will have reached that full risk rate. So for the folks kind of outside of that, it's useful to kind of structure this conversation in a way of thinking that for the majority of people after a decade, the full rates will have been taken into account. So that's one thing to think about when you talk to your constituents. And when I've given these presentations in the past, I've mostly focused on talking to local civic associations and community members. And so maybe half of my presentation is kind of geared towards how property owners themselves want to hear this information, what's most relevant to them. So just throwing that in as a side. So if there's any kind of good FAQs that you get from this, like, feel free to take these slides and use them for your property owners. It's sort of geared that way. I know it might be somewhat redundant for some of the floodplain managers who are on this call. I also do want to mention that with the old methodology, there was a cap to how much a single family home could expect to pay in flood insurance. That cap was about $46,000 a year. It's gotten substantially lower with risk rating 2.0. Within the first year, the maximum policy for a single family home is $12,125. So that's obviously a huge reduction. And truly most property owners are not paying that kind of extreme rate. But it's a nice talking point, when you're talking to your constituents. The maximum you're paying has gone down by about 75%. So that's something to consider. I want to talk a little bit about how this impacts, a little word, my slides are out of order, but a little bit how this impacts the community rating system. So if folks aren't aware of the CRS, the CRS is a program that essentially awards localities for having really strong floodplain management practices. It's a point system, and you get awarded points for things like having a really good information campaign for the public, for preserving open space in the floodplain. It basically rewards you for taking those actions that will reduce risk to property owners in the locality. And in doing so, you're awarded points. Those points they correlate to your CRS class. And each class goes down every time you step down, starts at 9 all the way down to 1. Each time you step down, you get a 5% reduction in property owners' flood insurance premiums. And that's really cool because that's a discount that goes directly to the property owner. Folks love that. And as Wetlands Watch, we love this program because it really awards open space in the floodplain as one of the highest scoring of activities that's available. And that's something that we certainly care about. But this is kind of just a chart that shows you how much you can save within the CRS. And if you're a class 1, you could save up to 45% off of each property owner's individual NFIP policy. So there have been some changes, and we're still, as the risk rating 2.0 went into effect on April 1st of 2022. So we're still trying to figure out some of the data to see how this is going to impact the CRS. Historically, you've been able to get these big benefits. We don't have any, I don't think there's any class 1s in the country. We've got a lot of class 8s, a lot of class 7s, and some really exemplary communities are down to class 6. That that creates a 20% premium reduction for folks who have been in the special flood hazard area. One big change to risk rating 2.0 is that premium reductions are no longer based on the special flood hazard area. So because the NFIP is not using those flood insurance rate maps to dictate these policies, if you have a national flood insurance policy and you're enrolled in a CRS community, then you get this discount. So it makes a huge savings to localities. It makes a huge savings to property owners. Nationally, in terms of the impact of risk rating 2.0, to this point, about 23% of the country has seen a decrease in their flood insurance rates. It's been about $86 a month on average. The majority of folks have seen an increase, but it's been pretty insignificant. It's about $0 to $10 a month. You've seen some larger increases of $10 to $20 per month by about 7% of folks. And then there are 4% who have gotten greater than $20 a month increases. A lot of those are the preferred risk policies or folks that have really high value properties that hadn't accurately been kind of priced in before this process. However, and some good news, in Virginia, we actually have a much nicer spreadsheet to look at. In Virginia, 45% of folks have seen an immediate decrease in their policies, starting on day one. Outside of that 45% who's actually seeing a benefit from risk rating 2.0, there's about 48% of folks who have got a moderate increase, $0 to $10 a month, maximum of $120 a year. No one wants to spend more money, but it's not a deal breaker for the most part. Our extreme increases are much smaller. About 5% of folks who are increasing their annual premiums between $120 to $240 a year. And there are 2% of folks who are seeing greater than $240 a year increases. So a lot of the increases through risk rating 2.0 have been in localities in Florida and in Texas, Louisiana. So we've sort of been fortunate in that sense, but still, with all of these changes, there's a lot of confusion, especially at the local level. There's a lot of folks who have heard about this, but don't really understand what exactly is going on, are very concerned that their rates are going to increase. And with every community, there will be some folks who have seen a significant increase, and they're trying to figure out some answers as to how that happened, what they can do to deal with it. So like I said, I've been talking to a lot of community groups about these changes, and I've heard a lot of questions just from property owners. And so the things that have come up a lot, I just put up this slide as kind of quick talking points in case you all might get the same questions. One, there's a $250,000 maximum coverage cap for the National Flood Insurance Program, and that has not been changed. So nothing has changed with that. That's still the maximum for coverage. A lot of folks have been curious about when these changes go into effect. Like I said, if you have an existing policy, those new rates go into effect on April 1st of this year, April 1st, 2022, but you won't actually see a rate increase until into your annual renewal. So typically that's the date you bought your house. It can vary a little bit, but it'll show up annually. So when the change comes, it'll be when you renew your policy. For folks who have started a new policy, those rates actually went into effect in October of 2021. So they've been dealing with it for some time now. Elevation certificates, they're no longer required to purchase flood insurance. That's a pretty big change than it once was. There's been some confusion about this, but you can still provide an elevation certificate. And it's interesting. You can provide an elevation certificate and your flood insurance agent can tell if that will reduce your premiums or not. If it does reduce your premiums, you can use it. That's great. If it actually increases your coverage, you're not required to use it. So one thing we want to make sure folks are aware of is that make sure you go ahead and get one and just see, because for about 80% of the cases, it will reduce your premiums. There might be some cases when it would increase the cost theoretically by quite a lot, but you're not required to use it. You can submit it to your insurance agent and it's not going to be part of your overall application. So it's an important sticking point. One of the biggest things, and I've talked to some folks in the real estate industry, and there's a lot of property owners who are pretty upset about this, and I think it's going to be an issue moving forward. Individual mitigation actions reduce premiums much less than they used to. We're seeing about a 5% reduction in insurance premiums for different mitigation actions. And in the past, it could be up to 50, 60% of premiums being reduced by installing flood vents, elevating homes. Right now, those actions that an individual can take are having a very, very small effect on your actual insurance premiums. As I say in the slide, elevations should provide the larger discount. We haven't actually seen that yet. Since this came into effect in April, we're still trying to collect data. FEMA is not always the easiest entity to get data from. So we're tracking this pretty closely, and we're trying to figure out how we can direct property owners, what are the best steps you can take to reduce these premiums. But at the moment, those individual actions are a very, very small benefit, which is unfortunate. But with, like I say, with such a large change, and being the first change in 50 years, there's going to be some issues. It's going to take some time to kind of figure out how to make this work effectively, and I think that's one of the examples of where this is a real problem that needs to be addressed. So those initial CRS slides should have been here. I don't know why they moved on me, but just a couple of notes about Risk Rating 2.0 and its impact on the CRS program. So at the moment, Risk Rating 2.0 doesn't currently impact how activities are scored under the CRS. One of the big takeaways and one of the big benefits, kind of as we think about the CRS, is that because the flood insurance rate maps are no longer part of the NFIP, in terms of the insurance side of it, it means that all policies, whether you're within the 100-year flood zone or outside of the 100-year flood zone, all policies receive the same level of discounts, which is going to be huge and actually going to create quite a larger benefit for the localities who are enrolled in the CRS. That is subject to change because CRS Next is coming. This is basically an attempt to link Risk Rating 2.0 to the CRS program. We hope to make that as effective and efficient as possible, but it's a long time coming, and the discussions have already been kind of delayed. We don't really have anything we can share with that yet because it's all still being developed. But just as an aside, Wetlands Watch is tracking that work pretty hard, and we're having all of the updates about CRS Next and how this affects the CRS program. We're listing all that on our website. And we also are chairing the CRS work group in coastal Virginia, but everyone within the state is more than welcome to attend those meetings. We encourage folks from outside of coastal Virginia to come and attend. And that's kind of where we discuss these big impacts when the changes come. I would hope anyone who's interested in enrolling or in strengthening their scores would come out and join us on that. So just in practice, I didn't realize I had these animated. Just go ahead and, okay. So just in practice, when we talk to localities, when we talk to property owners who've already gotten their new scores, it does seem like square footage has the biggest impact on cost. And I think part of that is going back to that equity issue that Risk Rating 2.0 is trying to address. For a long time, basements were more, had a bigger role to play in your overall score, your overall premium. Those seem to have a small impact on cost now. As I mentioned, mitigation measures have a very small impact on cost for whatever reason. And as I said, elevation certificates can usually help in about 70 to 80% of cases. They will result in a lower premium. But again, we should always be encouraging constituents to go ahead and get one because they won't hurt you. They can only help. You don't have to use it if you don't need to. There is some challenge in trying to analyze this work because the methodology data is not available to us, but we're going to keep on working on it and see what we can do. So just kind of an overview, like I said, of the CRS program in Virginia, just so folks who aren't enrolled can kind of get a better idea. There are 74,000 total policies in Virginia for the National Flood Insurance Program, or 74,500. Within that number, 81% of all the NFIP policies are held within localities that are already enrolled in the community rating system. which is great. I mean, it's a pretty healthy number, so we're happy to hear that. There's still some opportunity for folks who are not enrolled, for localities who are not enrolled, to address that remaining 19%, but it's a pretty good place to start. Within those policies, annually, Virginians pay about $47 million a year in flood insurance premiums, but we get about $6.5 million a year in savings through the CRS. And so that's, like I say, it's wonderful to property owners, but it's also for localities, the savings are a wonderful thing, but the sort of the flood preparation that comes from doing those actions and being prepared has much higher benefit as well. I didn't explain what these CRS activities numbers are on this chart here, but just as a heads up, by far the highest activity for CRS points in the state is open space preservation within the floodplain. That is the thing that generates the most points, and obviously has a multitude of multiple benefits that we try to support. So before I kind of give it up to the localities who have some experience in CRS and can speak on their experiences, I just wanted to mention that in 2017, 2018, we created a report where basically we tried to do a cost benefit analysis of participation in the CRS. So as you can tell, there's a lot of savings to be had. There's a lot of fun, there's a lot of savings available to property owners. It's usually a pretty popular program, but it can be kind of confusing to be a CRS community. There's a lot of work with FEMA. It takes time, and especially with more rural localities, there's an administrative barrier there where there's only so much capacity to be had. So we tried to estimate how much time floodplain managers would spend on the CRS, how much that costs versus the savings it would give to a specific locality. So we made this report in 2017, I think, and we talked to pretty much every CRS coordinator in the state. How much time do you spend on the CRS? What's your salary? How much can we estimate the cost of this program, this administration to be? It was interesting, and it kind of speaks to the difference between an urban and a rural locality. But from the folks we talked to, there were some folks who spent almost no time on the CRS. There are some folks in the more urban regions who had CRS coordinators who spent 100% of their time working in the CRS. So there's this huge range there. But in general, for localities who were enrolled in the CRS, we saw about 13% of time was being spent on the program. Having said that, with the CRS being structured the way it is, almost every action a floodplain manager takes has some CRS component connected to it. So if you have the time for it, you can sort of do these measures whilst you're doing your existing work. So it's hard to estimate that time, but we tried to put it right at 13%. And we used that and we compared it to the benefits that different localities get within the CRS program. We found that on average, the benefit cost ratio for the 21 localities that are participating in the CRS, we saw about a 15-to-1 cost benefit. So median was 8-to-1, but we saw a pretty strong benefit for folks to be enrolled in this program. The highest benefit cost ratio was 68-to-1. Shout out to Norfolk. That is a pretty efficient program being run. So if folks are curious about this, we have a report. It's got a link right there, where we kind of go through all of the different localities and talk about what's feasible, what's not. And like I said, 81% of NFIP policies are already in CRS communities. We do think that there's still some space to grow. There's some space for more localities to enroll in this. There will certainly be some cities that have a very small number of, very small floodplain, and it's not worth the administrative time. But I think we could get that 81% number a little bit higher. So I'm looking forward to hearing our localities give their expertise in this program and talk about their experiences. So that'll be fun for me too. Feel free to ask questions now. Also, if you want to put them in the chat, I can think about them and we can talk about them after our localities speak. But happy to answer any questions now or offline. Just give me an email. And like I said, Mary Carson, my coworker, she's been the head of all of our CRS work, and she's the one who chairs the coastal CRS work group. And we are so happy to have anyone from the state come and listen in. We also have folks from outside of the state come and talk and come and listen, because it's a really great opportunity to express how you're improving your scores. And so I encourage you all to do that. But thanks very much for your time, and I'm looking forward to hearing from Ann and Tristian. So I'll stop now.
Ross, maybe before we jump into Ann, there is a question about what's the difference between a flood and a storm surge? Maybe we could quickly answer that one.
Well, I suppose for the flood insurance rate maps, there would well, I guess it depends if you're in a high hazard coastal zone or not. So, you know, we often talk about the 100-year flood because that's kind of the regulatory floodplain. But if you're on the coast, you know, you have like the high hazard zones where you have flood, but you also have storm surge, and those areas have higher requirements. You know, it's sort of how you see, you know, along like Outer Banks, you have houses on piles. You know, there's different requirements in terms of what can be below the base flood elevation. So there are different requirements between a high hazard coastal surge area, I would say, and the traditional 100-year floodplain. But maybe a point I didn't mention in my presentation, but it is really important. So while the NFIP, the policies are not based on the 100-year flood insurance rate maps, all of the regulations that are required still are. So something that was still in a coastal A zone, a high hazard zone, is still going to have the same requirements that it would have had before risk rating 2.0. But yeah,
So-
higher standards would be the big one.
Well, and a couple of follow-up questions. Doug mentions that he read in E&E News recently, the vast majority of property owners that are dropping flood insurance nationwide are folks that had preferred risk policies before risk rating 2.0 went into effect, i.e. not required to purchase, no mortgage requiring, et cetera, due to significant premium increases through the NFIP. As FEMA seems to have realized that floods occur in places not mapped as Zone A, special flood hazard areas. So how are these unmapped properties being rated for flood risk by the NFIP? And are you seeing people move to private insurance?
So that's a great question for a few different reasons. One, something I should have mentioned before, but when we talk to local folks, you know, not local government officials, but just community residents and in the floodplain, we are seeing that a lot of folks have gotten rid of their preferred risk policies. They're seeing the price increases and they just don't want to pay it. We would like to do anything to avoid that, and I think it speaks a lot to how important it is to have a really good public information campaign. Just as an example, I think it was in Hurricane Matthew that 70% of the damage that happened in Virginia was outside of the special flood hazard area. During Hurricane Harvey in Harvey, Texas, or in one locality in Texas, I can't remember its name, but something like 75% of the damages occurred outside of the floodplain. So when you think about development and increased precipitation and, you know, more impervious surface, we're always seeing areas flood outside of the areas they traditionally did. It's not going to go away. I think it's probably our responsibility as, you know, localities and as resource providers to explain why that's so important to maintain your coverage, even if it's not required. Because if you live in a 100-year flood zone and you have a federally backed mortgage, you're required to have a national flood insurance program policy. But outside of that, there is no mandate. So it really comes down to education. Because like I say, we've seen already folks are getting rid of their policies. And this happens, you know, I've been working at Wetlands Watch for about 7 years, so I've seen a little bit of it, but I've always heard that, you know, during the periods where we don't have a big storm, the policies go down and down and down, and then there's a big storm and everyone gets one for a few years. So I really think that's kind of an awareness education issue we have to address, because it's a big issue, especially because those PRP policies are the ones that are having the higher price increases. So you almost have to sell these residents on why it's important to do that. So really, I mean, a lot of folks don't realize that flooding isn't part of your home insurance. You know, it's just, there's such an awareness issue. And I think that I have blinders on because this is the work we do all the time. And I think everyone spends 40 hours a week thinking about it, but that's not the case. And especially in transient communities like Norfolk, where you have a lot of military folks moving in and out, you know, people just aren't aware of these risks. So I think that's where some of these PPI programs really come into effect. And what's the second part of that?
And just to follow up on that, Ross, you're exactly right about the people don't understand what for example, after Katrina down in the New Orleans region, there was a lot of bickering with the insurance companies about what was the flooding that was wind driven versus just water driven. And
Right.
people don't understand, what does their homeowner's insurance policy cover? So education does seem key about how penny wise but dollar foolish it can be to get rid of your flood insurance.
Absolutely. Yeah, that wind driven issue always comes up.
But the other half of that question was, are you seeing people move to private insurance?
Yeah, so that's really interesting and something that I'm trying very hard to be able to track. Anecdotally, yes, I'm seeing a lot of it, but we have been unable to get any data from the private insurance groups, so when I talk to folks, it sounds like, there are new entities that are offering flood insurance now, and they're using LiDAR, and they're trying to make it very efficient. They're often offering cheaper policies. I'm curious how long that will last. I'm a little bit skeptical of it, but I would love to know, because I think that one, it would help us understand our overall flood rate, because there are a lot of folks who are vulnerable to floods who don't pay for flood insurance because they can't afford it. There are some folks who can't afford it and they're just trying to get a cheaper private policy, and we can't really get an idea of where that number is because we can't get that data. So I would love to find out if I could. But definitely, at least anecdotally, I've definitely heard of a lot of property owners who are switching to private plans within the last year or so, especially.
And kind of connected to that question was a follow-up of any speculation on how these new NFIP rules will affect participation. It's the same kind of question, right?
Yeah, I am hopeful that they won't have I think that, again, it's sort of an awareness issue, because I think when people think about changes, they think, oh, my policy is going up. Like I said, we're pretty fortunate in Virginia that we don't have the massive increases that some states are having. And again, there's this 18% rate cap that kind of mitigates that for the folks who are going up. So I'm hopeful that it won't be a huge difference, especially because there is still the mandate if you have a federally backed mortgage. But it's still to be determined. There's a lot of this stuff that we're still trying to figure out, and it's really, when we get the data, we can do some analysis and we can talk to folks, but we're still kind of waiting on seeing how, like I said, this is the first update in 50 years. So it's going to be several years to really figure out what these outcomes look like, I would say.
And one last quick question before we hop over to Anne. What about commercial property? Is there a higher cap for that?
Yeah, that's a great question that I don't have the answer to, but I will ask my coworker who's smarter than I am, and I can probably give you an answer by the end of this presentation.
Thank you. And I think we'll hop to Anne in light of the time. Thanks. Thank you, Ross.
Okay. Thanks for having me. I'm going to represent the kind of more rural locality, though I think Tristian has some experience in that as well. And I'm definitely not the expert. Elizabeth asked me to participate, but I really don't do this full time. So if you have any specific questions, I'll do my best to answer. But we became a CRS community in 1994, and we started out as a class 9. And Ross already went through all the classes. But I have to give credit to our building official, Paul Cole. Originally, actually, Ken Somerset, who's with Picosin now, started it. But when they were assigned the CRS program, they really wanted to make it better. And so they continued to do additional things to improve it. And that's kind of how I got involved. They realized that planning was important for looking at the floodplain areas and preventing, risk to flooding. So Paul came to our department and asked us to work on a floodplain management plan. Of course, we didn't have staff to do it, but one of the graduate students from VCU offered to do it. He was a local person, and so he went and actually worked with the community and did a floodplain management plan, coordinated with our department and with our building official department. One of the lessons learned there is, he did a great job and we had a lot of input, but he didn't document. And so we didn't get credit for a lot of the things he did because it wasn't documented. So, but since that time, part of that process was to creating a floodplain management committee. And so that is probably the best result of that plan. We created a committee which included up to, I think it's 13 members, but a lot of citizens and fire and rescue and a lot of county staff. And through that committee, we were able to work to increase or actually decrease our rating to, we're currently at a 6. So the committee did a lot to work to do the PPI, the public information outreach. We actually work with our community engagement department to do information in our Beehive, which goes out quarterly to all the citizens of the county. So we actually put the flood management map in that document. We have a whole website that has a lot of information. And then Paul and several members of his crew go out and actually go to Lowe's, and they work with contractors on some of the mitigation efforts that can be done for resiliency. So it's kind of sad to hear that they're not going to get much credit for that anymore. So one of the things that happens in small localities, once Paul retired, actually he's back part-time because we couldn't get another person to fill his role. So Paul's back part-time, but the CRS program was transferred to our engineering department, and Brent Payne took it over. And again, he was all gung-ho, went full force, and worked very closely with Wetlands Watch, with Mary Carson, and he was able to actually improve our rating even more. And in January 2022, our Floodplain Management Committee was presented the Virginia Floodplain Management Association's Community of the Year Award. So that was pretty wonderful, all the work that committee did. We were also very lucky to have a member of the committee, Ken Evans, who is a local insurance agent. And he was able to convince our board of the benefits of the program and how it really did help people and was important. And I remember back, I think it was in 2014, it was a big fight to get them to do a two-foot freeboard for our building code. Just recently, starting July 1st, we are now at a 3-foot, and that went through pretty easily. So again, just working with the community and trying to make them realize that, you know, this is good. And again, the committee, the Floodplain Management Committee, which has citizen members on it, has been really very helpful. They also review the floodplain management plan every year and update it. We have a lot of goals that we never reach because we just don't have the staff or the time. One of those goals is we've been working a lot with Mary Carson on our open space mapping and hoping to actually get us down to a 5. That's been kind of on hold since we lost Brent Payne to another agency, so he's no longer here. We have nobody in our engineering department. We're still working with the committee, but it's really just an administrative person that's keeping the committee going. And hopefully we can get some of that going back once we get staff in our engineering department. Some of our initiatives that we tried to do, we actually worked, the committee had great ideas for road made flood signs. We really had issues with that with our, the residents didn't want those signs in their community for real estate purposes. And also VDOT really was very strict about the type of signage you can put along the road. So we still don't have any of them. But again, we continue to work to do education. We do produce things in our Beehive, and we're working to keep our level that we're at now at level 6, which is pretty good in Virginia. I think we were the first to get it. I think James City County is coming, they're beating us pretty quickly. But again, I just, from a small locality, it's the turnover. And I mentioned all those names because there's really the champions of the program that took it further. And so between the committee and staff members that really were interested in making the program work, it was wonderful. But once those people leave, it's a little harder to keep it going. So that's kind of where we are.
Thank you. That was great. I think that we'll just go straight to Tristian because I don't see any questions for you in the box at this point. Thanks.
Good afternoon, everyone. As Anne mentioned, I did have a little bit of experience with CRS in a rural community. And I want to say it was about 2010, 2011. I was working as a planner for Isle of Wight County, and I was tasked with trying to get the locality into the CRS program. And I do remember there being a lot of hesitation, not necessarily from the legislative body. It didn't even get that far, but from the various departments, because it does require a lot of coordination. It's not just planning. Some CRS coordinators are in emergency management, some are in, in engineering. So it was really difficult to get them on board to, and so I think that also set us up, I wouldn't say for failure, but no success or not moving forward. So, 10 years later, the CRS coordinator position, which was newly created in the city of Norfolk, popped up. I was able to start working there, and it was an entirely different experience. One of the biggest things, like Ann mentioned, having champions, city council is our champion. That makes it so much easier for us to be able to move forward. We were at a class 7. I don't have the exact dates, unfortunately, just kind of left my head, but we were at a class 7 for a while. And as I came on board, we moved to a class 5, and that was actually effective April 2022. Right along the same time as the risk rating 2.0, new rates kicked in. And, like I said, having, your city council or your board of supervisors being the champions, creating a position so mostly to work a majority on CRS really showed us in the community that we're very committed to, keeping this going. And as Rob's mentioned, we had the best cost benefit ratio analysis. Making that, from a class 7 to a class 5, increase the savings of flood insurance premiums at the time to $2 million. So for the city of Norfolk, it was a no-brainer. I did notice that, the city of Norfolk is an older city, and it's also urban. So unfortunately, things like preserving open space, which is, it's a mitigation, banning all development within, your floodplain is the most ideal scenario when it comes to safety. That's not an option for us. So we had to go for different routes and find different things in order for us to get more activities on. A lot of things that we noticed was that we are doing some of the work. It's just you have to tweak some of the activities a little bit in order to get those points. Unfortunately, that did require us to actually hire a consultant, because the CRS program is very vast, but it also can be a little overwhelming, even for those who are seasoned or familiar with it, to really guide us. And 2 of the activities that we really were able to get a lot of points in was drainage maintenance, which we already do. It was just, the documentation, and then activity 610, which is like your emergency management response warning. And so that was a really cool experience. It was very, hectic trying to get all of the information, because it is, as you go through and increase your class score, it does require a lot more work. But our crowning achievement, we really feel like, is our program for public information, which if you actually go through the manual, you don't actually get points just for having a program for public information. It's a multiplier of all these different engagement efforts that you're supposed to be doing. So with your program for public information, you have to have a committee. And one of the good things about that is 50% of your committee has to be from the outside stakeholders. So we have, insurance industry reps, we have, real estate reps, we have mitigation specialist representation, public policy, and we actually, because the city of Norfolk has a very high transient population with, your students from our 2 public universities and the military, is that we actually have a student representative who also is a social work in the master's program. So social workers also, specialize in engagement within the community. So we really tried to kind of, make it as, well-rounded to be able to focus, because it really all is about engagement. And that was one of the things that Alyssa is our CRS coordinator. And I noticed is that I'm not sure if it was because of, COVID or just, we also have just a lot of different things, but maybe we weren't reaching the public quite as much as we could be. So during all of this, it's still in its infancy, and you have to meet at least annually, but we realized that we needed to do it at least 3 times a year. to meet with our committee in order to really, get our messages out, and are we doing what we need to? And risk rating 2.0, I will say, it might not have affected the CRS, points ratings, but with the PPI, it's all about engagement. You have, topics and messages you have to send out. It really put a wrench in that because one of them is your financial benefits of mitigation. We would send out media blasts and Twitter, send out, letters to people and say, hey, these are the steps you can take to reduce your flood insurance premium. Unfortunately, that's not necessarily the case anymore. So, financial benefits of mitigation, how do you get people to elevate their, air condensers and for their HVAC system? If you don't actually have, you can't point to saying, hey, it reduces your premium. So with the committee, they've really kind of helped us to go away from, financial benefits to more safety versus, trying to dangle the carrot of financial, benefit. So that was one of the things that we really had to think about. And even, one of the things also is your X and X shaded policies. How do we reach them? Because now we're realizing that a lot of them, their policies are increasing. And, intuitively you think, oh, they're going to still be decreasing or the same because they're outside of the special flood hazard area. That's not the case with risk rating 2.0. So our committee has really, let us know through the industry insiders that might be, a topic or a audience that we really need to spend more time on. And so that's really helped us. And like I said, our PPI is kind of like our crowning achievement. And we really think that not only does it get us those points, but it also allows for us to create a relationship with the community that we already have a difficult time because it's cycling through so often. And how do we get a lot of those messages like, don't drive through, areas that are inundated by flooding. That's another topic that we have is, if you have a population that stays pretty steady and is the same, overall, it's a little bit less arduous of a task versus somebody who's, you have people who are on military orders and that are constantly cycling out, or you have your college students that are constantly cycling out. So it's really allowed for us to understand the needs of our community through engagement. And like I said, it's definitely been interesting, even in the best case scenario with CRS and having all of the support, it's a program that does require a lot of, it does require a lot of time. And one of the things I did want to mention, and I know Ross stated it, the CRS user group is amazing. It's really a great place if you're thinking about, joining, or if you are and you're struggling and you want to get ideas, please join this. Our group, you can go in person or even, virtually, and it's a bunch of places, a bunch of localities for us to really bounce ideas off of each other. And all of the different legislative, items that come up. So I really highly plug that. And I think that, it's something that's been so valuable. And it was even, I was a part of it even in 2011. So it's been around for a long while. And of course, if anyone has any questions, we are meeting with another locality to go over our program for public information. We would be happy to share, all of the, facts and, the good stories, the bad stories, whatever. But it's definitely, I think for a lot of communities, it really is worth the push to, get into the program. And that's about, I could go on for days and days, but I'll spare you.
No, thank you, Tristian. That's great. And thank you both for those insights. It really helps a lot to augment what Ross has presented. So we all appreciate you being here. And are there any other questions from the audience at this point? I see one in the Q&A, but we already covered that one, Jillian. So if there are no other questions, maybe we should bring up the poll to ask everyone what they'd like to hear about next.
Sure.
Thanks. So as you can see, there are three choices that we put out there. The Virginia Department of Health is doing quite a bit right now, looking at their at the septic regulations and what's needed to help reach some of our socially vulnerable communities who are looking like they're going to be impacted by sea level rise, and how their septic system works. Funding for resiliency. We have Hampton is a great example of using their environmental impact bond. That should be EIB, and the Community Flood Preparedness Fund. And then Winchester, a further West Riverine Community Flood Preparedness Fund again. And then the Chesapeake Bay Preservation Act. The Department of Environmental Quality has a guidance document that they just closed on October 6th for getting comments online to that. So could be a good timely topic for November or December. So I don't know, Jillian, how much time you need to compile those results, but
I think at 75% we're good, so I will.
well done. I'm voting, everybody. Vote early, vote often. Okay. Looks like the CBPA is the winner, and then funding and septic are almost nose and nose. Wow, that's interesting. Okay. Thank you so much for that input. That's really helpful to us. Again, we started out talking to the APA folks about doing about 6 of these. So we'll probably bring it through to the end of the year, and really appreciate everyone's participation and the polling. And thank you again to our speakers. Any final announcements or anything you want to add, Ross, at the end?
Well, one thing, so I sent this, but it might have only gone to the host and panelists. So just in terms of that question about the commercial cap for NFIP coverage, the commercial cap is $500,000. So twice as much. And then Jillian just added a link to the CRS work group in case folks want to get involved with that process. So like we've said, it's a nice place to come together and talk about some of these issues. And I think more than anything else, it's helpful to have a space where local practitioners can just talk and figure these things out. So please join anytime you want to, whether you're an enrolled member or not.
Great. And thank you to APA Virginia for being farsighted and hosting this series. We really appreciate it. I hope that everyone has a great day. And without further ado, I think that's the end of our webinar for this month. Thanks so much.
Thank you everyone for your participation. It was a great webinar, and everybody else keep tabs on your inbox for a follow-up email coming soon.
Thank you.
Thanks, y'all.